Hi guys, this is an S&P 500 technical analysis update. It's 29th of May 2020, so let's go into it. As we've been saying on this YouTube channel for a while, we've been calling these lows for months now, while everyone else has been quite bearish. Still, the positioning and sentiment is very, very bearish. It takes a bit of time for that to reverse, and frankly, this market's going to go to 4,000, as I've been calling when the lows, were down here. Now, we'll get into the Elliott wave count in a little while, but it's going to be something along these sort of lines. I mean, definitely before the US election, we're going to make all-time new highs, and then the euphoria is going to continue till we get this final blow off top. It would now be extremely unlikely for us not to end up doing this eventually over the next, let's say, 6 months to a year or so, given how everything has been positioned. Now, shorts are starting to cover finally, and the reason they are covering is simply because of this moving average, which, to those who are new to this, the 200-day moving average is something that we watch mainly on the daily chart. We don't really look at this at any other time, and as you can see, we have crossed above this. So when we're below this, a lot of funds would sell. When we're above this, they're now forced to buy. Now, the Elliott wave count, I prefer to think about this in terms of the most bullish possible way, which is something along these sort of lines. The line that we've sort of looked at is 1, 2, 3, 4, 5, and this is all the 2, and now we're in the 1 of the third, right? So that would all be a wave 1 into here, A, B, C, 2. So very simple, flat. This is now the 1 of the third. So 1, something like this 2, which we'll get onto in a minute. 3, 4, 5, 3. Well, let's just draw that correctly. So 1, 2, 1, 2, 3, 4, 5, 3. Let's say to, 3,500. Then a retracement to, let's say, 3,300. Then we get this final blow off top. Now, 4,000 seems incredibly unlikely when we were down here, of course, but that's the whole point of this game. You kind of have to get in early to take advantage of the move. Still, I don't feel we're anywhere near any kind of top, so still 4,000 is another 33%, and as we've been saying for a while now, bull markets, they end in euphoria. That's just the way this game works. It's pessimism, grow on skepticism, mature on optimism, and then die off euphoria. And Bitcoin 20k was a very euphoric move, but this euphoria here is going to be 100 times bigger than we saw there. So anyway, that's the 5, that's the 2. So this is probably a 1 and a 2. Now in June, it's very normal for the market to do a bit of sideways ranging. Obviously, everyone's late to the party, so these people have to be shaken out of their positions. So if we say this is all now the 1 of the third, it's very possible we get a pullback to 2,945. The VPOC of this entire move is at 2,855. Not too sure we get as low as that, but here you would aim for these fibs as a way to sort of add to your position sort of thing. So 38, 50, 61.8, and I wouldn't be surprised if throughout the whole month of June we basically all we do is chop around, because people who are late to this party, they have to get shaken out of their positions in June, and then July, August, we then get this run up pre-US election, which usually starts late August, September time, and then we end up making new highs. So don't be surprised if we go into a bit of a correction mode. So this is very much a know when to step on the gas and know when to take some profits off the table, really. Nothing goes up in a vertical line. Now the other count is that this is the 4 into here, and this is the 5, then we get a much larger 2, but that's assuming too much. I don't want to assume too much, given that the Nasdaq is already pretty much at all-time new highs, and we really have to follow the Nasdaq here as well. So that would be my take, is that I wouldn't be surprised if over the next, let's say, 3 weeks or so, we chop around, tag some of these POCs, and then we end up doing something like this maybe later on in the summer. And like I said, if you take a Fibonacci of this move, to me, I think it's extremely likely the way this is setting up, we easily attest 2,944. Whether we get as low as these sort of lows, I'm not too sure, but That is very much possible, and certainly in any Elliott wave count, it's very normal to come back to retest either the previous wave 2 or wave 2 of the extension, and also frankly wave 4 as well. So maybe all we do is get a push back to 2945, then we start going higher again. But if anyone's expecting anything bigger than let's say any retest off the lows, that's just not going to happen. We are not there yet. This market has to go parabolic first, basically trap everyone, as in the entire world, because this is a once in a 20-year move, well, once in a 90-year move really, if you look at 1929. And then when we get to 4,000, then obviously party's over, time to call it a day. So the time to go down to the put side is well, I wouldn't even say soon. I mean, we're just nowhere near there yet. So that's just something to sort of think about there with the S&P 500. And the Dow Jones was lagging somewhat, but the Dow Jones, I've been calling for 40k on the Dow pretty much as far back as 2 years ago, as you can see here. So the Dow Jones was just lagging. I do think eventually we do break 30,000. It's not as important as the S&P and the Nasdaq because it's only 30 stocks and it's price weighted. But even here on the Dow, if you run the same sort of count, that it's a 5 inch here, 1, 2, we could easily come back and fill this gap. So Dow, I do expect Dow to make all-time new highs once again before the US election, because the Dow, although it's not important to us from an investment perspective, purely from the psychological numbers that we see here, it's important. And certainly 40k, that call that I made many years ago, that is still on. Down here it looked unlikely, it's a near 100% move, but this is why you got to get in at the lows basically. Now going back to the ES, what we can do here is we can actually pull up the SPX cash, because some of these gaps are yet to get filled. So once again, we're looking at 2945 as a 38.2. So let's just say hypothetically short term here, it's purely short term. The market's so bullish, it can just hit 2935, test that 38.2 and just bounce again. Okay, you can't expect anything. I'd be surprised if it goes below 2766. Anyway, we do have a big yawning gap here as well to entertain. So, that would be a good target. So like I said, I wouldn't be surprised if now we get some chop, which is very, very normal because everyone's missed the move. Everyone's FOMO'd in, all the hedge funds and whatnot. And they're basically now forced to buy because they have to buy when it moves above the 200-day. And obviously smart money are selling into that liquidity, which is very, very normal. So, you kind of have to know when to go long, when to go short, and when to stay out off the market. Typically over summer, you'd never want to get too involved. Nasdaq's done really well. But I wouldn't be surprised even if the Nasdaq gets some kind of correction. Now, I don't think it changes anything. I'd be surprised if Apple, let's say, argument's sake, goes below 300. You can't expect anything, even if that is a completed 125 into here. You could easily overthink this and say, look, a large ABC correction, maybe a flat, maybe this, maybe that. It doesn't change anything at all with Apple, because this is the one stock that if anyone's going to choose a stock, they're going to go into here. And like I said, we've got much higher targets here. We're looking at 420, which once again we were calling before any of this occurred. And that's really the only way to make money in these markets. These markets are very, very difficult to call. So you kind of have to, get in early really and just go from there. And let's just have a look. So that's basically it. And if you just pull up the Nasdaq here, maybe there's a couple of gaps on the futures here for Nasdaq. That's obviously not the Nasdaq. Nasdaq is here. Yeah, so, there's no need to overthink what's going on here. Maybe we get a pullback. You could read that as a 1, 2, 3, 4. A, B, C, D, E, probably complete a 5. But we have a VPOC here, 9,000. Maybe we get a pullback towards 9,000. But I'm not expecting miracles here to the downside. As you can see, the Nasdaq broke the 200 ages ago, and that was really your leading indicator. Nasdaq, it's important to look at Nasdaq when you're trading ES, especially because you get a lot of relative divergences to the up and downside. Can it even go as low as this, 278799? Yes, maybe, but don't expect anything like a large ABC. If this 200 keeps on coming up, and this correction, quote unquote correction, lasts until June, maybe we end up tagging this 200 as it starts to sort of roll upwards like this. Maybe, yes, we might tag the 200, right? It's going to end up doing something like this. Maybe we end up tagging it, but I can't expect the Nasdaq to fall too much lower here. It's just too bullish, and even though there is some rotation going on, that doesn't mean tech is just going to fall out of bed. A lot of these tech stocks are still very heavy players in the S&P and the Dow, which is why it's all about Apple and Microsoft. And yeah, we're looking at 14,000 here. Once again, as I've been calling on this video here, which was more than a month ago, and I said 90 days, and we're pretty much already there. So just to finish off here, let's just quickly cover these altcoins, because as I've been mentioning to or alluding to, these altcoins are in for a huge move. It's a great time to join the group. I've never seen this before. 4 inside month candles, so a huge breakout is coming here, either to the upside or the downside, and it looks as though it wants to be up. I mean, certainly Bitcoin also wants to be consolidating here, so it's going to be very, very interesting here in Bitcoin over the summer. Nothing really wants to sell off here. Bitcoin breaks to the upside, and the altcoins, maybe we get something like this, where we just get a complete madness here. So there's something just to watch here. Definitely with Bitcoin and with the altcoins, something has to give sooner or later, especially with the altcoins. I mean, a lot of these altcoins, one I like in particular amongst the many, I mean, it's just so low. I mean, at some point this has to turn. Just has to turn here at some point soon. So definitely one to watch with these altcoins. A lot of them are significantly low levels, and really it's about the altcoin dominance, and it's about Ethereum, BTC. So something there to watch. Like I said, you can join the group if you're interested in, well, basically everything, because we do cover everything. And I don't think there's anything else to sort of say here. So let's just take off that 200-day moving average. So that would be my count. There's a 5 into here. This is a 2, as in a larger degree 2. This is just a 1 and the 2. I don't like this as the 5 because that implies a much larger correction, and I just don't think that we're going to get that. So very interesting times. Once in a lifetime move here to 4,000, and then we're going to have to start calling this top, and this is how it's going to top. It's going to start becoming very, very volatile towards the top. The first part of the move is always vertical, then it gets very difficult. As we make new highs here, 3,400, 3,500, it's going to start doing a lot of this. It's going to start wedging, and basically it's going to end up forming, I think, an ending diagonal. That's usually how they end, is a 3-3-3, 3-3-3-3-3 pattern. Something like this, where it ends up wedging. I mean, that is pretty much just there. So, whatever, right? It's just there, whatever. So it's just like a rising wedge. This is how it's going to end. And so calling this exact top is going to be very, very difficult because of how it's going to end. But regardless, there will be weakness in this market into all of this euphoria, and it forms a wedge until it gets to the point where all the selling has been done, and all of the retail has basically is basically the counterparty to that selling, and then they don't have strong enough hands to hold it up, and then next thing you get the move down. So this whole vertical move is still going to continue, but I do believe towards the end of this move, it's going to start becoming very, very difficult and start to become very, very wedgy. Of course, the alternate to that is just if it ends up doing a 1929 and doesn't form a wedge at all, which would be abnormal, really. I mean, it should really form some kind of wedge. It just ends up doing this and just going completely vertical. I mean, here, really, the move started from this shakeout here, and then we got a 91% move. So you could argue we're sort of here now. 6-7 weeks ago, we were sort of here. But even this got a little bit difficult. You see how it's chopping around, forming a bit of a flat, then it goes up. So do expect some volatility towards the top here. That is very, very normal. And even in 2007, we got some kind of wedginess here. As you can see, it started to sort of wedge, form these sort of divergences, and these are some of one of the 20 signs that we look for here off the market peaking. But it starts to wedge, form a bit of a flat, form a bit of this volatility kind of spike spiky sort of wedgie action, and that's when we know we've got a top, but we're nowhere near there yet. I mean, right now it's still going vertical. So something just to think about when it gets up to these higher sort of levels, and then that's it, it's all over. So I'll wrap it up there. If you want to join the group, you know what to do.